Hello everyone and welcome into the channel. My name is Brent, and in today's video I want to go ahead and make a quick video going over last week's changes in the market and this week's changes as far as the 21st to the 25th of April 2025. I want to go ahead and get this video going before the market opens and begins to change a whole lot of things, just to kind of have it as a historical record. So if you guys have any comments or questions, let me know down below. One question for you guys is, what do you guys think of the market? Do you think we'll go higher? Do you think we'll go lower? Are we going to be trending sideways? Be for the S&P 500 in that 520, 540 range? Let me know down in the comment section below. I'll let you guys know my thoughts here shortly, and let's go ahead and get into it. So I always like to start off these videos by taking a look at the Fear and Greed Index. We have ticked higher as far as less fear in the market. Last week when we did our videos, it was roughly a 16 or 17. It is now at a 21. There's less volatility out there in the market. Worst case scenarios are kind of have been seen already, where the US is going to be implementing tariffs across these dozens and dozens of countries at higher than expected tariff rates. Whereas that has now been paused on a 90-day period where negotiations are going through to come to agreements, right? So that sort of all out worst case scenario has been thrown out there and has been pulled back. Now, there is still retaliations going back and forth between the U.S., with the latest stuff being that the U.S. has implemented a 145% tariff on all exports to the United States. This is expected to potentially continue back and forth, but there could be some retaliation from them. But from what I've heard here through the weekend, China's reached out saying, hey, get a spokesman going, we'll get a spokesman going, let's get some negotiations going. There's been a lot of chatter that part of the agreement with the US and these other countries is that, hey, we'll come to an agreement, we'll call back our tariffs at that base of 10%, but we want to make another agreement that you don't want to, that you kind of stonewall China for the time being or for the foreseeable future as we make negotiations with them, right? They're kind of creating a channel for them that only go to the US for negotiations. So that might be upcoming in the next week, 2 weeks, as to we might see some progress with that and see the markets actually move higher from this point on. We did see on Friday, after some of the news there, the Dow Jones took off as it's a bit less tech heavy, right? There are more industrial, Dow Industrial Average. There's a lot more things there that are impacted by the higher tariffs being from equipment and such from exports from China. So they were down 1.33 on Friday. The Nasdaq and S&P 500 were essentially flat. S&P up 0.13, the Nasdaq down 0.13. I did check in on the S&P throughout the day on Friday. It had actually been up over 0.5% before climbing back down to end essentially flat on the day. We can see here throughout the 1 week period, on Fridays of close until Thursday of close, the S&P actually lost about 1.5%. We saw the Dow Jones get hit the hardest here, end of Friday up until end of Thursday. It was down 2.5%. And the Nasdaq was trailing right behind it. Close of Friday up until close of Thursday, it was down roughly 2.22%. So tech companies such as Amazon, Tesla, Meta, Google, Microsoft, Nvidia were all negative on the week. The only one part of the Mag 7 that was positive was Apple. There was the chatter there with tariffs, right? Computers and phone device items would not be tariffed as high in order to not drive those devices that would affect US consumers higher. So that actually ended up being pretty positive for Apple. But if we take a look at the year-to-date performance of Apple, it had actually been one of the higher hit ones. Down at a time, it was down right around 30%. So it has came off those lows, now down being roughly 21.34. Tesla still pretty far down at 40%, Meta 14.35, Google nearly 20%, Amazon 21%. Nvidia down 24.5%, Microsoft 13%. I'm gonna say Amazon or Microsoft has definitely been beat up, probably the worst out of all of these for the 1 year. If we take a look at the 1 year performance, look at Microsoft down 11.29 on the year, right? So really just kind of interesting there, interesting. As far as economic events that'll take place this week that could be impacting your portfolio. I found this cool website called tipranks.com. I'll have a link down in the pinned comment down below if you guys would like to check this out. It has a little indicator of events that'll take place throughout this week that could impact the market. You can see low impact, medium impact, high impact. You can see on Wednesday we're going to have the S&P 500 Global Manufacturing Purchasing Managers Index. And, you know, these could be a few special items. I know a lot of investors are looking for new home sales. Are new homes kind of beginning to slow down? We can see here that the estimate is 0.68. Our previous was 0.67. We'll see how this number comes in. Another one that is pretty high out there in terms of eyes is the jobless claims as well. Durable goods is another high impact one. Job claims, right? So there's a lot of numbers on this page. They're just kind of really nice to kind of see of what is the average, or, you know, what's the estimate, and then what was the previous. So we'll get these numbers coming in throughout the week. So I thought that was pretty interesting. If you guys would like to check out this link, it'll be down in the pinned comment down below. Now, all of the indexes when I was watching this here are actually at a death cross. So you see here that the S&P 500 is now trading below that 200-day moving average at 573. Right now, as of close on Thursday, it was at 569.02. As we see throughout history, anytime there has been a death cross, that's generally not a good signal. Here we saw that death cross taking place here back in 2019 here. You know, if we go just back in history, there are times where that death cross has taken place and the worst of it has already kind of came through. Here we see that death cross right there, and then ahead we saw that sharp drop off and then recovery. Here, death cross, the worst of it was essentially already over, but here in early 2022 we had that death cross, and then it wasn't for 8 months or so later. I think we had talked about this earlier. It wasn't until August time frame where the S&P 500 had actually got back to break even and continued trending higher. So either we are already through the negativeness, right? That's how these kind of death crosses take place. It's either that we're already having gone through the worst of it, which I feel is kind of what I feel is, you know, that's my opinion, is that we've kind of felt the biggest impact and blow so far, and that from this point on, we'll either make our recovery to the uptrend as we make our, you know, the agreements out there, or that there'll be some volatility out there throughout the next 5, 8, you know, amount of months until negotiations are made and the market will move, right? Let me know down in the comment section below what your guys' opinions are on that. Dow Jones, similar thing. We can see here right now we have actually death cross. S&P 50 days at 521, the 200 days at 421, 200 days at 422. You can see once again these little markers here where it's prior death cross, where the 50-day, the blue, crossed underneath the 200-day orange and has been a sign of a negative trend. This goes back in history of it's kind of happening every single time here. Also the NASDAQ, QQQ, although this one has been a lot more volatile. So I'm just going to take a look at the last 10 years on this one, but similar things here. Volatility, death cross here, death cross, death cross. So either this is already the bottom and we'll have negotiations. It'll be kind of sluggish for the next few, either weeks, months, even up to a year. And we've already kind of gone through the worst of it, or we could potentially move even lower. Let me know down in the comment section below, what do you guys think? We did also see the dollar weakening throughout the week. So there's been some chatter that Trump wants to fire Federal Jerome Powell. So Fed Chairman Jerome Powell. So Trump launched a scathing attack against Federal Jerome Powell on Thursday, with his team evaluating whether they could fire Powell, a move that would cast doubts on the central bank's independence and further erode faith in U.S. assets. So this was something that we saw. Here's a quick summary. Investors worry about the Fed's independence after Trump, right? They're not part of the United States. They're their own entity, their own thing, right? U.S. assets have been getting dumped. The dollar is at a 3-year low going back and looking at 2022. You actually see that the current dollar, it hasn't been seen since 2022. Safe haven currencies are yen and Swiss franc. Gold notches another record high. So I have to bring up gold prices because I didn't bring that up, but I'll bring that up on my other screen. We'll take a look. And then all markets were closed on, well, the US and European markets were closed on Friday for a Good Friday. Now, taking a quick look at gold, it did recently hit a new high and continue to hit these new highs of 3404. This might actually be the most current high of, current, right? So we're looking at this right now. Gold is at 3403.90. So this is an all-time high at the moment. As I'm watching this kind of go through, I know a lot of investors are kind of deciding whether they want to cash in on a little bit of gold or hold it. I know a few friends that have gold bars and gold jewelry and stuff like that, right? It's either they're kind of discussing whether they want to turn it in, because we saw that just a few years ago, not even a year or two ago, gold was half the price, right? Back in 2022, it was as low as this 1500, so it was about half the price about 2 years ago in some time periods, and now it's hitting highs of 3400. So that's just interesting. Now the dollar here, as we kind of said, the dollar has been hitting its 2-year low. I got another graph here. Yep, here's the other graph. So back in February of 2022, the dollar hasn't been seen at these lows. Okay, it's right about, I can't get it any, I have to go back. Go back further, right there. February of 2022 is essentially like right there. Okay, either or, it hasn't been seen this low in what, 3 years, it said. And that is a lot to do with, as the article said here, Trump really wanted to get Federal Jerome Powell out. He wants rates to cut down. He wants the Fed to listen. And if the president of the United States can come in here and get always get what they want, that could be, as this kind of says, it kind of casts doubts on other country from other countries' point of view, that the central bank's independence will further erode, right? If we could just continue to print money and drop rates, what does that have, what does that say about this central bank's independence, right? And then in terms of other things that are coming up this week, we have quite a few good earnings. Now I'm looking forward to Tesla's earnings, Alphabet, Google. I circled Alphabet because I was watching this one. That'll be a big one for me. Boeing, Intel, GE Aerospace. Interesting. I wasn't sure that GE. Thought they were General Electric. Maybe I'm thinking of something different. And then, yeah, as we saw Tuesday, we'll have Tesla, Lockheed Martin, Verizon. Not sure if anybody's buying any Verizon out there. That'd be an interesting one. On Thursday is the big one. So we have Alphabet, we got Procter & Gamble, PepsiCo, Merck, and a few others as well. Friday, we got AbbVie, Colgate, and, Charter Spectrum Communications. So AbbVie could be an interesting one. Colgate, I haven't watched them in such a long time. I'm actually interested to see where they're at. I bought them a long time ago, and they had dropped so hard after. Oh no, they're down. They're still recovering from those highs, but pretty interesting. Okay, so I think that's going to wrap it up. I just want to do a quick video of last week's kind of discussions and chatter. I do think going forward that the market will kind of either trend sideways as negotiations are taking place. It could definitely be volatile as negotiations are made, or as retaliations are made, right? If we see more retaliations from China, if we see more selling of the US bonds, if we see that 10-year rate coming back to that high 10-year bond rate, I don't have that pulled up right now, but it has been actually trending back lower from its high of what, 4? Oh, I thought it was a little bit higher at a 6. Let me take a quick peek. This is something I should have popped up as well. Oop, okay, so yeah, 1 month, 3 month. Yeah, we saw it spike up very quickly from, it was actually below a 4. I believe it was at a 3.6 and then spiked up very quickly to a 4.5, and it has been trending back a bit lower. This, I don't think there was any indication as far as who was selling US Treasuries, but that caused it to go quick, spike very quickly positive. So that's another thing that's kind of out there. We already talked about US Treasuries, the 10-year and the 2-year, how it's been an indicator of upcoming recessions and how it flashed earlier in December as a recession indicator. We talked about that in our last video, so I'm not going to bring it up again in this one unless we go into a recession in the next month or 2 months, right? But I think that's going to be it for this video. Let me know down in the comment section below. What do you guys think with the market? I think as of now, we found a bottom. We are going to continue to trend up and down a bit. I don't think we're going to be making our way towards those all-time highs anytime soon, as there's still a lot of uncertainty out there in the market with China, the US, and other countries coming to their agreements. So we might actually not see any sort of positive green to the upside for the next either weeks, months, or 6 months to a year, right? But I do think that in terms of negativeness, it's not as negative, right? If I were to say 50% chance you'd be green or red, I would basically be, green but very mildly green, or red but very mildly red. I don't see us swinging down 5, 10, 15% in any specific direction unless there's something out there that just kind of hits the market harder than expected. So I don't think we're going to see these wild moves here where the market's like downtrending for 20% for multiple weeks in a row where it just red, red, red. So let me know down below. What are you guys' thoughts? That's it. Thank you all for tuning in. I will catch you guys in the next one. Bye-bye.